Do you want to make quick profits trading Forex? Well, scalping is one of the fastest ways to capitalize on small price movements, and I'll show you how to do it easily. So in this video, I'll share beginner-friendly scalping strategies and pro tips to help you succeed in 2025 and beyond. And also, even if you have a small trading account. So what are we going to cover today? First, we start with what is Forex scalping, of course, right? Then we go over key elements of successful scalping, 3 simple scalping strategies, tools and platforms for scalping, and last but not least, risk management for scalping. So what is scalping? The definition is over here displayed. Scalping is a trading strategy where you make multiple small trades to profit from tiny price movements. So imagine that you open a trade and in 10 seconds, for example, or even 1 minute or maybe 2 minutes, in a really short amount of time, you also close the trade with a few pips, a few dollars, 100, it depends on your account, but with some profits, right? And that is scalping, that you open a trade and you do not wait for hours or even days or weeks. No, in a really short amount of time, you also close the trade again. And why does it work? Well, you take advantage of high market liquidity. So I recommend to, if you scalp, then you scalp during specific trading hours in which many traders or participants are active, right? So for example, during the London session or the New York session, in those periods, the biggest participants are active. And another thing why it works, yeah, it reduces exposure to market risk by holding positions for a short time. So if you keep it open for the weekend, for example, you hold it over the weekend or even the day, then in the meantime, something can happen, right? So let's say I open a trade, I go to bed, and when I wake up, I see that I am a huge loss. And then I look at the news and I see that, for example, Trump or another leader, world leader, acted strangely, or something happens, maybe a disaster, natural disaster, whatever it is. And then you are in a huge loss. Well, if you just open a trade and then close it in a few minutes, then this would not have happened to you, right? And it's also perfect for active traders who thrive on fast-paced decisions. So if you like to go in and out of the trades, then this is something for you. And also if you do not have a lot of time, scalping is not something that I recommend. An example for you. So imagine profiting 5 to 10 pips multiple times in an hour. And that is basically the essence of scalping. So you open a trade, an order, and your 5 pips in profit, boom, you close out the trade with 5 pips profit. You wait for, let's say, 10 minutes, you see another opportunity, then you enter another trade. 10 pips in profit, you close it out. Then 20 minutes later, you see another trade. Boom, open the order, few pips profit, close it out. And you do that, let's say, 10 times in 1 hour. Then in total, let's say you made 5% in general on average per order, per trade, 5 pips. If you do that 10 times, you would have made 50 pips in an hour. So that's basically how you should see it. The key elements of successful scalping. So there are a few essential requirements. First is high liquidity pairs. I recommend that if you scalp the Forex market, you only stick to the big major pairs, right? Euro USD is one of the most popular, or it is the most popular Forex pair there is. We have GBP USD, also popular one, and USD JPY is the second most popular Forex pair. So I recommend to only focus on these 3 pairs because they have tight spreads and high liquidity. Of course, you can scalp on USD Mexico or another exotic pair, but the spread is really high and it is not a good idea to trade this pair. It's not worth it. While if you compare it to Euro USD, some brokers offer a spread of 0.0 pips or 0.1 pips, right? So that is amazing if you're a scalper, because you're really fast in profit if price goes into the right direction. Another essential requirement is low spreads and commissions. I already mentioned it a little bit. Only use brokers with minimal spreads and competitive fees to maximize your profits. So there's a link down below in the description in which I share all the recommended brokers. So yeah, these are also regulated, so they are safe. But yeah, try to look for brokers that have minimal spreads. Some offer zero spreads, or even really low spreads. If you have a standard account, then for your USD it starts with about 1 pip, so that's also really low. The last requirement is, yeah, you really need to look for fast execution speeds. So again, pick a broker that offers this, right? Fast execution, because a slight delay can make or break your trade in scalping. So let's say that you see a nice opportunity, you click on buy, and it takes about 10 seconds before the order gets placed. In the meantime, you see that price went in these 10 seconds to the upside, but at 11 seconds it goes down. So that means that your order is opened at an unfavored position, and then from that moment we see price goes down, so you're in a loss. While if you would have entered the trade when you clicked the buy button, let's say you made 4 pips, for example, before price went down, and then, yeah, of course, 4 pips, you close out the trade, you're in profit, and price then dumps, right? So it's really important that you use a broker that offers fast execution speeds. Then we go over 3 simple scalping strategies, so let's go to the charts. Okay, so I'm looking at the Euro USD chart on TradingView. If you do not have TradingView yet, just check out the link down below in the description and sign up for a free account. Over here you can see the charts, and we see that price is in a downtrend, right? So that's the first thing you have to identify. Just check out what the direction is of the price. So over here we see price is in a downtrend, and what we do, we have the 5 exponential moving average, which is purple, and we have the 20. So a really simple trading strategy you can use is that it's one of the most simplest trading strategies. You just enter a trade on a crossover. So over here, this is the 5 that crosses the 20, and we see price also below these moving averages, and we take a sell trade. So over here we take a sell, and from this candle, we're looking at the 5-minute time frame, by the way, and if you are a scalper, you look at the 1 minute and the 5-minute. Those are the scalping time frames. So we see a crossover, really simple. We already identified the direction of the market, which is a bearish market. So we take the trade and we close out the trade when the 5 also crosses the 20. So that is about here. So it goes down, and over here we see that the price goes to the upside a little bit, and we see a cross the 5 exponential moving average and the 20, right? The cross happens about here. So that means that you would have risk 1%, for example, and you made 4.7% because we place our stop loss above the swing high. So that is a nice profitable trade, and really important, it doesn't always work out, because over here we see that the 5 exponential moving average crosses the 20, right over here, and we see price moves a little bit to the upside. So of course it depends on where you put your stop loss. I would again place it above the swing high personally. Yeah, maybe you can see this as a swing high as well, but normally I would have placed it a little here, maybe 1 or 2 pips above that. So that would about here, and then you would get taken out or almost get taken out. But let's say that you would have lost the trade, and that's fine as well. But we didn't trade this this opportunity. Why? It's about 5 o'clock, so in the morning. So this is not a period in which there is high liquidity, right? So if we go back over here, why did we took this trade? Because it was about 12 o'clock, and on 12 o'clock there is a lot of liquidity in the market. So if we see an opportunity, we take the trade around that time, right? So okay, this was not a great opportunity to take, so we do not place an order. But over here we see another opportunity, and let me see over here, the 5 crosses the 20, and it is about 8 o'clock, and on 8 o'clock we see that the London session is open. So that is a period in which we do take a trade. We trade London session and we trade the New York session, and the best time is during the London and New York session overlap, which is about 1 until 3 o'clock Amsterdam time. So I go down below, and where do we exit the trade? That is about here. We see that a cross happens about here, right? We see a cross, and then we close out here or here, whatever you prefer, but it's about a 1% risk and a 7.51% gain. So that is really good. So that is basically the strategy. You wait for crossovers to happen on a low time frame, the 5-minute or the 1-minute time frame, but you only trade during specific trading sessions, during the London session and the New York session, because the liquidity is highest around these times. And of course, now I show you really nice trades, right? 7.1, 7.51 return on investment, and over here 4.7. But as a scalper, you do not wait that long, right? We do not wait for, what is this, about 90 pips, something like that. We not wait for that. We go in the trade and we go out the trade in a few minutes. So we only take 5 to 10 pips and then we're out of the trade. Because over here, for example, we see another support. So let's say that we target the latest support, which is here, and then you're out of the trade, 14 pips. So that's really good. And of course, this is just an example that price went even lower. But normally we only take 5 to 10 pips, something like that. That is real scalping. Over here we took the trade, but where's our support level? Over here, this support level and this support level. So yeah, you can close out the trade over here, 13 pips, or even here 5 pips, something like that, right? All right, so the next strategy is the Bollinger Band bounce. What do? We go to the indicator section, we look for the Bollinger, over here, Bollinger Bands. We click on that, and then we have over here the settings. We just leave it on default. We do not do anything. Of course, you can play around with the colors, but it's okay in my opinion. So we go to the charts, and what the strategy is, again, you only trade during high peak trading hours, which is the London and the New York session, and the best time is the London New York overlap. But okay, the trading strategy is that, of course, again, we identified it is a downtrend on the longer and on the higher time frame. So we only look for sell opportunities, right? So again, what do? We wait for a touch on the upper band, and from that moment we only take sell trades, 5 pips in profit. We close out the trade, or when it reaches the middle line. For example, this is the blue line over here. So let's say that from here we see that it touches the upper side. Here we see it also, here also, and then we take a sell trade to the downside until it reaches, for example here, until it reaches the middle blue line, right? So this is a negative risk reward ratio trade, which is okay if this is just trading strategy, but it mostly results in a high win rate. But again, over here, this is the strategy. It touches the top side and we get out of the trade when it reaches the blue line. Over here, you can see it better. Zoom in a little bit. Blue line. Another trade is over here. It reaches the top side. We see a bearish candle. Place the stop loss about here. We wait until it reaches the blue line. Over here, we get out of the trade, right? And we keep doing that because we are in a downtrend. So we only trade when it touches the red line, the upper side, which is, it almost touched it over here, but it didn't. So we go down and then we see we do not take the trade. Why? Again, it's not the favorite trading time, right? Now we are looking at midnight. So this is not something we do. And then we wait over here until the London session starts. We wait for a touch and a bearish candle. Over here we see a doji indecision and we just take the trade, 2 pips, something like that. Or yeah, you can aim for 5 pips, or again you can also look for the support level, which is here, and then you get out of the trade with about 7.4 pips, 1.42 risk reward ratio. So that's good, and it's during London session, so that's also something that we want. So it ticked off the box as well. We go down. Is there another touch? We see here it's during the let me see, it's during the New York session. We see it touched the upper band. We aim over here and this would result in a loss. So again, it's not always profitable. We see here we take, oh yeah, we get another chance, put a stop loss here, and this time it does hit our TP target, right? So this was a nice win. Same applies over here. We see a bearish candle. First it touches the top side and we get out of the trade here. 6.9, almost 7 pips. Yeah, over here 7 pips. It's between 6 to 7 pips profit. So, and yeah, you keep doing that until again it's about 8 o'clock, 9 o'clock. London session is already over. The New York session is about to be over. So yeah, then you wait and you stop trading, right? So that is another trading strategy, scalping trading strategy you can do. We have seen the moving average crossover and the Bollinger Band bounces. Now we go to our last one, which is the stochastic oscillator scalping trading strategy. So we remove this and we look for the stochastic. Over here, technicals, stochastic, we click on that and we see down below an indicator that has appeared. What do? Again, we have identified that we are in a downtrend, and the only thing we do is we look for sell opportunities. So let me go to the settings over here. We play around with the settings. I like to use it and set it on 3. Some people, they use the 5. So for percentage scaling, they use 5, 3, 3. Yeah, you can do that as well. But I use the 14-3-3 settings. Style, again, you can play around with that. Okay, what do? So we buy when the stochastic is oversold, which is, it is below the 20 and crosses upward. And yeah, we sell when it is overbought, it is above the 80 and crosses downward. And we exit the trade after 5 to 10 pips or when the oscillator reverses. So again, we have identified it is a downtrend. We wait for it to cross the 80 and then it goes to the downside. So over here, this would be a sell trade, but we do not take the trade. Why? Because it's about 9 o'clock, so it's too late, right? So we do not take the trade. So we wait for another day. For example, here, it's about 7 o'clock, so London session opens. And here it is above the 80 level. Price goes to the upside here. And then it crosses down. And we take a sell trade about here. So here we take a sell trade. Place stop loss above the latest high, which is here. And then of course I can show you that it's a really big nice trade, but again we only look for about 5 pips, 5 to 10 pips. You can again check out the support level over here, or as mentioned, you exit the trade when it is oversold. So then you exit the trade about here when it starts to get above the 20 level. So that is about 10 pips. So that's nice. We look for another opportunity over here. It is above the, is it above? Yeah, it's above. So it is above the 80 level. You see that's here. Yeah, zoom in a little bit. Okay, and then when it crosses and it is below the 80 level, we take a sell trade, which is here. Here's our stop loss, and we aim for about 10 pips, and then we're out, right? So that is here, then we're out of the trade. And also here, then it would be a break even if you have waited for a cross to the upside. But if you aim for 10 pips, then this would be a winner, and otherwise it would be break even, right? Because you enter here and you exit here when it crosses to the upside above the 20 level. But again, over here you can play around with it. You can just do your back test, but this is a strategy that traders use. It is above the 80 level. We see a cross and it goes into the level below the 80. We take a sell trade, and then we aim for about 10 pips again. And otherwise here you would enter the trade, you would exit the trade again on break even. Last one here above the 80 level, and you could have taken the trade. However, it's about 6 o'clock, so it's a little bit late. You're a little bit late to the party. However, this turned out to be a winner as well. But normally I would say just trade during London and the London overlap, which is between 7 and let's say about 2 o'clock, 3 o'clock, something like that. Okay, so you can use these trading strategies, just play around and just check out which trading strategy suits your personality best. Okay, then we have tools and platforms for scalping. So there are a few trading platforms you can use, MetaTrader 4 or 5. I personally like MetaTrader 4, but 5 is also good, and it's ideal for scalping with customizable indicators. It's really good, and this is these two are the most popular ones at the moment. You also have CTrader, and CTrader is great for fast execution and advanced tools, but not many people use CTrader. Perhaps in a few years people will use that trading platform more often, but at the moment MetaTrader 4 and 5 are the most popular ones. And it also has the most indicators. It also offers the most indicators, so that's good. And you also have to consider low spread and fast execution brokers. So again, just check out the link down below in the description for the broker that I recommend. But it's really important that you have low spreads if you scalp, because let's say that you aim for 5 pips and your spread is 3 or 4 pips. That is not ideal, right? It's not something that you want, or that you enter a trade and then you have to wait 10 minutes before it places the trade. It's not something that you want if you're a scalper. But let's say you're a swing trader and you aim for 500 pips, 300 pips, then of course it's not that big of a problem if your spread is 3 or 4 or 5 pips. It's not a big deal. But if you're a scalper, it's really important to use a broker that offers low spreads. Then we have additional tools. Another really important factor is the economic calendar. You really have to avoid trading during high impact news events to reduce risk. So what you do before you even place a trade, you go to a website, for example investing.com, or another website that offers a economic calendar, and on that economic calendar you look for events during that day, for example NFP or CPI news announcements, and you do not trade during these announcements, or even better, between 1 hour before and 1 hour after the news event, and then we have a stable market, and then you can trade, right? Because if you trade during a high impact news event, then you could, let's say, take a sell trade, and then we have bullish news, then you would have blown your account, because sometimes not even respect your stop loss. So price moves that fast that a tight stop loss would not be respected. And let's say that you were comfortable with a 10 pip stop loss, because price moves that fast, you would have lost 20 pips, right? So that is not something that you want. And then another tip is to use custom alerts. So set alerts for key levels to react faster to opportunities. So let's say that you only trade support and resistance, then you can place a alert on your latest support and the latest resistance, and when it reaches that level, then you get an alert, you go to the charts, and of course you have already seen that there is no high impact news event, and then you can pull the trigger and then you can place a buy or sell order. Last but not least, risk management for scalping. So there are a few key principles. Always risk only 1 or 2% of your account per trade, or even less than that. 0.5% is also good, but not 10, 20, 30% of your account per trade. Is not something that you want, because if you lose a few times, which is something that could happen if you are a scalper, then you would have blown your account. That's not something you want. And always use stop loss orders to minimize potential losses, because price moves really fast if you're a scalper. If you do not use any stop losses, again, you would have blown your account if it keeps going into the wrong direction. And last but not least, avoid over leveraging. And while leverage can amplify profits, it can also magnify losses. So that's not something you want. If you have a $10,000 account, use a 0.1 lot size, for example, or a 0.5 lot size, but don't use a 10 lot size on a $10,000 account, right? Do not use leverage if you are scalping. My tip is also set a daily profit and a loss limit to maintain discipline and avoid over trading. So if your profit percentage target is 5% for the day, just stop trading when you reach that percentage. Just stop trading. Do not keep adding more trades because you would like to make 20% or 30%. No, just 5% and it's okay. Why? Because sometimes you keep trading while you have already made the 5%. You keep trading and then you start to lose. And then instead of just taking home the 5%, you would have lost 10%, right? So that is not something that you want. Just do not be greedy. Be happy with 5% and stop trading. But also, if you lose 5% in a day, just stop trading for the entire day. Just take a walk, do something else, and just go trade again the next day for new opportunities, because the market is open 24/5, because there's always another opportunity for you. So thank you for watching. If you like this video, give it a thumbs up, subscribe, and watch the next video that the YouTube algorithm recommends. I'll see you in the next one.